What if I told you that human beings are pre-programmed to make money mistakes? What if you're just set up to naturally screw things up in your finances? I know it probably seems hard to believe, when you look at it and you see how the human beings have absolutely dominated the earth. I mean, every facet of this planet has been colonized, if you will, by humans. So clearly, we have the cerebral ability to do some amazing things. But it turns out when it comes to investing in our money, we make very stupid mistakes. In fact, there's a whole field of economics called behavioral economics. It was started back in the late 1970s, early 1980s by Daniel Kahneman. He actually won a Nobel Prize for his work here. Now, it's one of the newer fields of economics, even though it was started in the 1970s. But when you compare that to some of them that go all the way back to the 1600s, hey, this is pretty new. But what Kahneman found out is there are actually 150 patterns that humans employ to make bad financial decisions. So I was initially just going to talk a little bit about the money mistakes we make, but then I started thinking, hey, here we are in the political season. I wonder if some of these mistakes we make with money could also apply to politics. Now, what Kahneman actually found out is the reason we make these mistakes is we really have two brains. We have the brain that all animals have. It's often called the limbic brain, but this one is set up to run on emotions. It's essentially set up to help you survive, the fight or flight. So you ever get that kind of bad instinct about somebody or something going on? Yeah, that's your survival instinct kicking in here. It's your limbic brain. It's your animal brain, if you will. But humans also have a second brain. And this is the one that's supposed to use reason, supposed to use logic. And the way your body works is the second brain, the logical brain, will more than happily give into the animal brain. So if you encounter something and your animal instinct takes over, your limbic brain kicks in, your rational brain, your logical brain will let it do whatever it wants. You have to actively step in and use your logical brain in order not to let emotion control you. So let's just take a look at a few. We're not going to look at all 150, obviously, but just some of the more popular ones that not only apply to money, but maybe also apply to politics. So the first one is called anchoring. Now, as it sounds, anchoring just means you're tied to something. And in the case of behavioral economics, what it's talking about is you are going to be tied to some sort of number, some sort of financial price. A great example of this was after the 2000 tech bubble burst. A lot of people who bought some of these internet stocks at triple digits refused to sell after these things had lost 50, 60, 80, 90% because they are always tied to the all-time high of that stock. So if you'd bought Yahoo at 150 and it got down to 20, a lot of people will hold on because they have that 150 in their mind. They don't want to sell until it gets back up to that 150 mark. And the reality is it may never get back to that 150 mark. It is not worth 150. Rather than looking and seeing what the price of the stock is actually worth, they get anchored to an artificial price. This also happened in the real estate bubble. If you find people who bought in 2004, 2005, maybe even 2006, they paid top dollar. So a lot of times they would refuse to sell the house even if the prices drop dramatically and they need to move. They refuse to sell. They end up renting it out because they're tied to that high peak. Now, there could also be issues with that. Obviously, if you had a $100,000 loss. Most people can't eat that. But you'll find a lot of people just do it because they're tied to that price. Now, I think you could also argue that we have a lot of anchoring in politics. How many times have you talked to somebody and they're voting Democrat or Republican because that's how their daddy voted, or that's how grandpa voted, or our family's always been Democrat, our family's always been Republican. So they anchor into something that's really not logical. It's more emotional than anything. Ties into our limbic brain. Rather than looking at what policies would actually benefit you, you tend to anchor in for some other reason. So, how do you as a human being avoid anchoring? Well, the first thing is you got to be using a hardcore analytic mind. So, don't let that initial emotion step in. Don't let your limbic brain control your process here. You have to take that extra step to get your logical brain working. For finances, I always say anytime you have a stock, an ETF, a mutual fund, real estate, anything along those lines, anything financial, just say, if I had the money today, would I buy this stock at its current price now? Or you just look at it and say, what you try to figure out what the fundamental or intrinsic value is of that position. And a lot of times that'll keep you from anchoring to an artificially high price because you're going to realize that, you know what, maybe Yahoo did hit 150 at the peak in 2000, but today, based on cash flows, based on earnings, it's not worth anywhere near that. So you may sell and put your money into something that can be giving you a higher return than what Yahoo would. For political positions, here again, don't do something because you're tied to it. Really dig in and see what you think is going to work best for you based on all of the different political positions. How's it going to impact you? So, if you have a situation where you're starting to make a lot more money and you've always voted Democrat, but the Democrats promoting higher taxes, you know what? Maybe it's time to vote Republican, and vice versa. Another thing that happens quite a bit, and this is probably the strongest bias that we have, is confirmation bias. So whenever you have a position, whether it's political, whether it's something with your finances, we always look for information that confirms our belief. If you think a stock is worth double what it is today, you're going to give a lot more credibility to a financial pundit who says the stock's going to double in the next couple of years, as opposed to somebody who says this stock's going to drop by 50%. Now, same thing in politics, right? I mean, it's amazing here how we can skew stories to fit our candidate. I think this is a perfect example that if you look at both of these presidential candidates, they're just horribly flawed individuals. Horribly. I think both of them probably could end up feasibly in prison. Now, those of you who are Democrats are probably bad mouthing me right now saying, hey, man, that all she did, she had her own emails. That was nothing. FBI said it. And then people on the Trump side said he never did anything wrong. All that stuff on the Trump University, all of that it's all manufactured for political reasons. Well, you know what? I think the truth's probably closer to wrongdoing than it is political discourse, if you really step back and look at it. The other way I find confirmation bias a lot in politics is people will only see what they want to see regarding things like signage in the area. Have you ever talked to somebody who says, I see Hillary signs everywhere, if they're a Democrat, or if they're Republican, they're like, all I ever see is Trump signs. Well, you don't realize there's a huge bias just in that sample size. It could be the place you live, it could be the people you associate with, but more than likely, you're just using the confirmation bias here. I had a friend of mine who threw something out on Facebook. Okay, everybody tell me who you're voting for. No judgment. Let's just get a number. Well, one candidate just stomped on the other. But here again, we're getting into a bias. I hear a lot of people talk about how Trump rallies are so much bigger than Hillary rallies. Well, you're just trying to take, if in this situation, they're probably a Trump supporter and they're trying to use that confirmation bias to say that Trump has a better chance of win because of political rallies, even though political rallies don't have a strong correlation to vote totals. Just ask Bernie Sanders. He would draw many more people than Hillary ever thought, but yet Hillary got more votes. So avoiding confirmation bias is really almost impossible to do completely because everybody is geared in certain ways. Everybody has their own natural bias. If you're a Republican, no matter what, you're going to be looking for things that confirm the Republican candidate and vice versa for Democrats. The only thing you can do is to really refuse to completely dismiss opposing views. Look at the facts, be as objective as you can. If you look at, say, Hillary, and you're trying to say, oh, no, this was all political wrangling by the Republicans. Well, I mean, if you look at it, she set up or the Clintons set up a foundation in Canada that accepts money, and then they send it to the one in U.S. where they don't have to report who gave it to them. She had a private server that handled her emails, and then when she discovered she was going under FBI investigation, she destroyed devices and cleaned the server. Not really. I mean, if you're going to look at this thing objectively, it's going to be awfully hard for you not to say that there's probably something there. And I'm not here to be political, but what I'm saying is you have to step back and look at the circumstances. Don't let your party affiliation drive your decision. Another bias is hindsight bias. So as human beings, we want to have order. We want to understand why things happen. So what we do is we always look for the reasons that something happened after it happened, even if we didn't know beforehand. So for instance, you'll hear a lot of people talk about the tech and real estate bubble as how it was blatantly obvious. And the funny thing is, most people who are sitting there saying it was blatantly obvious lost a lot of money in both of those because it wasn't obvious at the time. Yet with hindsight bias, we start to say, well, yeah, anybody could have seen that. You had companies that had no profits that were selling for hundreds of times their cash flow. Real estate, you had homes selling for substantially above what wages would support or inflation. So it's very easy to look back with this hindsight bias. Same can go for politics. I think after this election, regardless of who wins it, and I'm doing this the day before the election, so we'll find out very soon. But I think after it's done, it's going to become blatantly obvious to everyone why the other candidate, the losing candidate, was flawed, right? So if Trump loses, you're going to say, look, this guy, he just didn't have the personality. He had tons of baggage. He's very crass. He doesn't respect a whole lot of people. There's going to be a lot of reasons why people are going to say he lost. And it's going to be blatantly obvious to all of us, even though half the population doesn't see that at this time. And then conversely, for Hillary Clinton, I think the exact same could be said. When you look at these scandals, we have a candidate who's technically under an FBI criminal investigation. So if she loses, that's going to be something that people point to. Plus the fact that both candidates have the lowest trustworthy ratings ever. So I think we'll find all kinds of hindsight bias once it's all done. So how do you as an individual avoid hindsight bias? Well, first, don't get too cocky. Don't be too overconfident. You don't know as much as you think you know. The other thing you have to do is decide what can go wrong with my position. So hindsight bias, again, you don't see it until things have already passed. But if you're always kind of questioning yourself, what could go wrong with my thesis? It can help you identify reasons before they happen. So if you're only making 60,000, but somebody's telling you can buy a house for 600,000, you got to start to question that. Don't just take the word for it and then after the fact go, hey, you know what? There's no way I should have been in that home. Now with hindsight bias, clearly you have a lot more control on the financial side of it because it's your money. Whereas with politics, you get thrown a couple candidates and you have to choose from that. However, as you're making the case to others in the political realm, trying to convince others to vote for a candidate, you can use this logic to help yourself. Another bias that causes us to make stupid decisions is the overreaction bias. So clearly, as I mentioned before, we make most of our decisions based on the limbic or emotional brain. So a lot of times, this is a pretty obvious bias that we should all have. We tend to overreact, and this causes an overcorrection. So if we get a new piece of information on a stock, in most cases, you're going to find that the moves are more dramatic than what they should be. If markets are truly efficient and all known information is priced into a stock or bond or any other kind of financial asset, then a new piece of news shouldn't have a dramatic influence on that price unless it was something like fraud or bankruptcy. But if a lot of those should already be known before that news comes out. A really good example here is a couple of behavioral economists, Richard Thaler and Werner de Bont, did a study looking at the overreaction bias. These two guys looked at the 35 best performing and worst performing stocks over a 3-year period. So what they did is they looked at, okay, these stocks, these 35 had done the best and these 35 had done the worst, and they did it for 3 years. Then they compared the performance of the winner's portfolio and the loser's portfolio to a market benchmark. And what they found over the ensuing 3 years, so the next 3 years, they found that the losers outperformed the benchmark while the winners consistently underperformed the benchmark. So what Thaler and de Bont concluded that in both cases, investors overreacted to news, thereby pushing stocks with bad news to unjustified low levels and pulling stocks with good news to artificially high levels. Now, I think we can easily apply this to the election cycle as well. So as news comes out, you can see polls swing quite dramatically in many cases over the short term. But if you look at the longer term, things tend to be pretty consistent. So how do you avoid overreaction? Well, the first thing, you have to take a longer term perspective. So if you own a stock and it got pummeled due to some news that came out, you have to say, well, you know what? Would I buy this stock today if I had available cash to do so? Or has the underlying fundamental reason why I bought this stock initially changed? If not, then you want to hold on to the stock. You don't want to anchor to the high price. You want to take a look and see if it can be justified today. Same with politics. Don't let the movement of the polls decide how you're going to vote. Don't let it affect you. Stick with your original fundamental decision here. Now, clearly, another thing you could do if you're using your part of the brain that uses reason and logic, you can actually take this overreaction bias and use it to your advantage to make more money. So here it's not just avoiding overreaction bias, but using it to your advantage. And this can be seen by how value stocks or value assets tend to overperform growth or other blended investments. If you look historically, stocks that have gotten beaten up or sectors that have gotten beaten up tend to revert to the mean. They tend to correct, and when they do, they give a better return to investors than when you're buying a hot stock or a growth stock. So it's awfully difficult to do because you have to go in sometimes, hold your nose and buy some of these stocks or buy some of these bonds or asset classes. But those who are willing to buy on the cheap tend to get a better return over time. So the last one we'll look at here is called prospect theory. So what this says is that losses hurt people more than gains feel good. People will do whatever it takes to avoid losses rather than try to get gains. So even though the logic should apply to both gains and losses, the same thinking, we look at choices differently in order to avoid the losses. So let me give you an example here. Let's say you have $1,000 and you have to pick one of two choices. Choice A, there's a 50% chance you're going to gain 1,000 and a 50% chance you'll gain nothing. Or choice B, 100% chance of gaining $500. So choice A, you could either end up with 2,000 or stay at 1,000, or choice B, you're guaranteed to be at 1,500. Now let's look at this thing the same way, but look at it from the losing aspect. So choice A here, we're going to take that $1,000. You have a 50% chance of losing 500 and a 50% chance of losing 0%. Or choice B, you have a 100% chance at losing $250. So in theory, go ahead, pick your choices. In theory, you should be looking at this risk exactly the same. So if you're the type of person who would pick choice A in the first example, where you could gain $1,000, you should also be picking choice A when it looks at the losing, because what that's saying is you're a little bit of a risk taker. Whereas which people who choose choice B in the first example, the 100% chance of gaining 500, well, they should also be taking 100% chance at losing 250. However, what Kahneman found when he did his study is that you often find people do the opposite. So frequently what they'll do is they'll choose choice B, guaranteeing that they're going to get the $500 gain. But then when it comes to loss, they'll choose choice A because they still have a 50% chance of not losing anything, even though choice B, you'd only lose 250. So they do what they have to do to try to avoid a loss, but on the gain, they're not as worried about getting as big of a gain. In politics, you can see this quite frequently as well. Voting for the lesser of two evils. That's prospect theory. Rather than maybe voting for a third party that really matches your political persuasion, you vote for one of the two major party candidates, even though you really can't stand either of them. But you choose for the lesser of two evils. You'd rather not lose. So how do you avoid prospect theory in your life? Well, one way, a lot of people will sell winners too soon with stocks or bonds or other asset classes, and they hold their losers too long. Again, trying to avoid that loss. They're anchoring to a higher cost. So in this situation, again, look at each stock or asset class and say, what's it worth at this point? If it's gone up quite a bit, maybe you keep it because when you do your fundamental analysis, it could go up further. Same with on the losing side. If it's lost money, don't hold it just because it's lost and you don't want to realize that loss. If the stock's really heading the wrong way, you're better off selling it even at a loss and buying something that would do a better job for you. On the politics, here you got to get some guts and vote your conscience. Don't worry about not picking a winner. If enough of us start to get some guts and we vote for people we really believe in or the positions that we believe in, the political situation will change to our advantage. So that's just a quick little look at how our brains make us bad investors and probably bad at picking politicians. Not that there's ever a good politician, right? I mean, come on. Oof. But I thank you for listening. And I do have information. If you ever want to get a monthly newsletter from us, just go to picketfencefinancial.com/education. You can sign up for our newsletter. We've got videos there. We have podcasts, webinars, all kinds of information for you, completely free. The other thing, if you sign up for our newsletter, you'll always get alerted to my webinars and podcasts and other items. I have a lot of in-house seminars, face-to-face, that you may be interested in. Also, strongly recommend you go and like Picket Fence Financial on Facebook. Would love that. And on YouTube, if you search Kirk Kinder, you'll find all of my past videos, and you might find something that's actually worth it. So I thank you very much. And if you have any questions, please do not hesitate to contact me. I'll be more than happy to help you out.